But here's what I wanted to show you, something that we've been digging into to try to understand what happens when a market freezes. And what I've got for you here is a couple of examples. One of the comparables for this situation, because there are no comps, but one of them is 9/11. The freeze was what we called it back then. My brothers and I were running a business, and all of a sudden, quote unquote, nobody's buying houses. That's the way we remember it. I went back and looked, and what I discovered was that my recollection was actually off. What happened back then was the market came down 35%. In other words, there were 35% fewer people that moved in the months after 9/11 than were otherwise going to move. 2008, the financial crisis. And that crisis looked like this. Again, everything I'm saying here, the 35% decrease, that was not in the prices of any of the houses. And I'm not talking about home sale. I'm talking about people going forward with decisions to move. And so this is the number of people moving via a home sale from 2000 to 2005. It peaked, it came down. Back then, it was a free fall. It was a meltdown. It was all over. The housing market is finished, right? But what actually happened is that a strong year, forget the peak got crazy, but in a very, very, very aggressive real estate year, you'll see 6 million home sales. Again, reasonable comp to people moving in a rental situation. At least it's data to get an idea. If 6 million is a typical, very robust housing market, we went down to 4 million home sales at the very trough. And after a few years it thawed out and it came back. But the deep freeze after the financial crisis in 2008 was a 35% reduction in the number of people moving. Same number. And I'm just telling you that the activity after 9/11 was the same thing. That's just something we discovered a couple of weeks ago. Then the people in our IT department began to give us spectacular data, week by week, and in some cases day by day data, to tell us all of these different early indicators about what's happening in the business. We're trying to figure out what's going to happen tomorrow based upon what happened yesterday. These are inquiries, people, tenants that are inquiring of us. So you look in January, our inquiries really began to rock out. We were headed into a spring market. We peaked in this 6,500 range, and then it came down, and the peak and trough was about a 35% reduction. And now it's leveling off. Okay, look back here. See this? It came down aggressively and then leveled off for a couple of weeks. And we're looking at this week as be the third week in a row that we think we found a bottom, and that bottom is a 35% reduction from the high. Here's another one. This is applications, right about 35% reduction. So I am convinced at this point, based on this data and all this disparate stuff, that we are seeing right now the market leveling off at 35% of the activity that we were otherwise going to see. History is repeating itself. A third of the people, they're not going anywhere, but 2/3, they are going somewhere. All right, so what that means is that the left side, that was what the pie was going to be. The right side of the pie is going to be now. This is a 35% reduction in the size of the opportunity for us. It's not 0, it's not 10%, it's not 20%, it's actually 65%. The whole objective is to be as data-driven as possible to persuade you that there's a pie. All right, that there's business to be done out there if you stay active. So outworking your competition and then outfoxing them from the standpoint of finding ways to keep yourself focused and positive, and finding ways to do things that are going to help you build your business.